I want to thank everybody for visiting with us this morning. The topic of our presentation is risk management for business owners and professionals. And I thought today to introduce our panel members. First, we have Miriam Campbell right over here, this lovely woman who is a professional banker. I call her the banker's banker. And that's because with all her varied experience, she knows how to help businesses find a way to build relationships and improve their relationships with their banks. And she's going to help us understand what types of things are important in building that relationship. Next to her is Keith Collins, our resident attorney. He is a specialist in business and concentrates his practice in real estate. Going over different types of legal agreements that you should have in business and why, and some stories about actual cases that'll help us all to be mindful to consult the proper person when it's time. The part that I'd like to start with is insurance. I know that's a topic that kind of is on everybody's mind, especially with health insurance today, but a story comes to mind in that we have to be aware of all the different types of insurance there are, the types of companies there are, and having the right specialist or broker help you to find a fair price for the right coverage and help you identify what that is. It's important that we know that everybody is aware you get an envelope in the mail and you know it's a bill or a statement from an insurance company, and suddenly you're going, oh gosh, not another thing here. But what happens if you opened it up and it said, thanks for being a great customer. Please fill in the premium that you think you should pay for our coverage this year. What would you do? How would you know what was fair? And zero is not fair. You want the coverage, you want the service, and zero is not a good number. And we've also had that same time when we opened that statement up, and it was higher than the last time. And we're going, oh, I hate this. What am I paying this for? Homeowners insurance is a lot like that. Car insurance is. Unfortunately, we use car insurance. It's demanded that we have liability coverage. If we have a loan against a car, we have to have it. If we have a loan against our home, we have to have it. If we have real estate, the mortgage company wants to have it. But what do we really need to have? Well, there's a difference between what we call insuring things and self-insuring things. When we self-insure, that's when we're walking around and having a nice walk today, we have no life insurance. That's self-insurance. But that's okay because you understand what the risk is. If you go to your office and you have a computer and some files and some other items and you have contracts that you give people and they pay you things and you have employees, then you usually have a business owner's package. And it covers things like workers' comp and your property and your liabilities. And it also might have a benefits program for employees. And those have gotten very expensive. Well, what do you do about that? Should you even offer it? It used to be that if you had a benefits plan, it was because people needed health insurance. And they couldn't get it maybe. Well, now they can. So are your employees loyal to you? Do they value what you're putting into it? Do you know if it's a fair price? Are you ignoring other things like your key employees and yourself? Most business owners, the last person to take a paycheck at the end of the day is them. How are you going to get your money out of your business? How do you guarantee that the key people, and you are the key person in your own business, if you have some other people you rely on, how do you guarantee that they're going to continue to be a profit center for you? How do you keep them working for you? Is your work environment good? Do you have a human resources person? There's a lot of liabilities today because people like to complain a lot. And sometimes they have a right to complain, and sometimes that becomes litigious. And Keith Collins is going to share a little bit about that. What about insurances on your place of business? What happens if you have a fire? What happens if there's a flood? What happens if you can't use it? That's called loss of use. It's the same thing with people. Loss of use. What happens if you lose the profitability of your key person because they had cancer? Now, they're not dying, so you don't get to collect the death benefit. They're disabled, and they might have disability insurance, and that pays them. But who pays you for the loss of the profits that that person was generating? That's a specialty too. That's called critical illness insurance. And that's something a specialist would know about. So who do you rely on? Why do you rely on people? The different markets that are out there, there are many different coverages. And it's my hope, I've left a list of things that you might consider. If you're unfamiliar with them, share those questions with a professional. Somebody can say, maybe you should have that, maybe you shouldn't, maybe it makes sense, maybe it doesn't. There's a list that I've prepared along with a bio on my experiences. But I think it's all important that we recognize that being in business is a wonderful thing, but it also can be a nightmare if we don't set the basis for our business. We don't do the groundwork. That's to do the legal, to have a good banking relationship, to have the proper insurances in place so that we can move forward. We'll handle some questions at the end of our panel presentation, and I'd like to ask Miriam Campbell, our resident banking specialist, to share some information with us. Miriam?
Thank you, George. Good morning, everyone. Thank you for coming. As George explained, I'm going to be talking a little bit about what banks look for when we are helping small or mid-sized businesses leverage assets, whether for growth or whether to reposition certain debt structures that they already have. So one of the things that we concentrate on that goes along with businesses and risk management is, again, this terminology of asset protection and how do you protect your business against liabilities, against pitfalls and risks. And obviously, George has already touched upon one thing that we all require as banks, whether you're doing business asset financing or real estate financing, or you're acquiring a company, or you're doing a management buyout, we are going to require insurance. It's mandated by law that you have insurance on business assets, that you have insurance on commercial real estate if you are a manufacturer and have a building that you occupy. But we also focus on other types of insurance that are just as useful. We certainly like to see life policies, key man life insurance, when it is a business that is owned, operated by a key individual, whether it's the owner or whether it's a key person on the management team. We do look to see how has the business owner protected himself as well as his key employees with regards to insurance, life insurance, or key man life insurance. Another thing that is, aside from insurance, which again is a very important and the most effective way sometimes to cover and protect assets, is as bankers and as people, as individual business owners, you want to consider separating your personal assets from your business assets. There's a lot of small businesses usually that we see that don't do that. You need to separate. If you have a commercial building that your business occupies, you should consider separating ownership of that commercial real estate piece as opposed to your business assets, whatever business assets you may have, whether it's equipment or just simply receivables and inventory. It allows you to limit your liability in case there's injury, especially on your property, and it also has a benefit from a tax perspective. All of these things are, of course, things that you need to, as a business owner, not only seek the advice of your insurance agent, but also of your attorney Because there's different structures that you can use to separate corporate assets from personal assets, and Keith will go more in depth on those. Another way to separate assets, as well as do estate planning, which is one of the things we also look for, is succession planning in your business, especially if you are, again, the owner and the key person in your business. How much succession planning have you done? How do you plan to exit your business? Are you going to, do you have children that can take over for you? Are they active in the business? Have you put in play a long-term plan for an exit strategy, whether you're selling or leaving your business to your heirs? One of the ways that you can also do that, estate planning, and separate personal assets from business assets, is by using trust services. So living trusts are vehicles that can do that. Land trusts are vehicles that can do that. And since I am a banker, Wintrust does have a land trust department that can provide those services, and we also have corporate trustees that often work better than your significant other or your son or your daughter, from the standpoint that a corporate trustee can provide not only the services of upholding what your living trusts may say or how you've planned your land trust, but it's also the experience, the objectivity, the reliability of a corporate trustee as opposed to someone in your family. Those are all things that you should consider if you own a business to manage risk. Last, I want to just briefly hit on or briefly discuss, when we talk about asset protection, you should also be thinking about protection in the sense of, are you compliant as a business? George mentioned if you provide benefits to your employees, does your 401k plan hit the bells and whistles of today's compliance requirement? For example, are you providing those educational tidbits to your employees? Do they understand what plans to choose from, what investments work best for them? Those are all requirements these days that is the business owner's onus to provide, and experts such as George can certainly alleviate that responsibility and take it away from the business owner and provide what is necessary to be compliant with today's regulations. Corporate records are something that banks require, and it certainly makes the process easier from our standpoint as well as yours. So having accurate corporate records, having corporate records that are compliant. Every business that is incorporated should be holding or at least having annual minutes in the corporate book, should have everything up to date with regards to compliance with your corporate checkup. You should have on a yearly basis a checkup with your insurance agent and with your attorney to make sure that, again, you are hitting those compliance and those record requirements. And one last thing I want to talk about as far as asset protection. When we think about asset protection, and George kind of hit on this a little bit, what about when you do have a damaging fire? You do have something that can postpone perhaps your normal day-to-day activities, can have an adverse impact on your normal day-to-day activities. Or even, you're a victim of fraud. Someone gets a hold of a check that you've put in the mail, they altered the check, it's gone through your account, and lo and behold, you discover it weeks after it happens. These things are all things that we sometimes don't think about until they do happen or there's a risk of happening. So when we look at asset protections, when we look at businesses, we like to see businesses that have appropriate coverage in case of the unusual events, but we also like to see businesses that have taken additional measures to protect their cash flow, to protect their receivables, to protect their inventory. There are some tools on the cash flow side that banks can provide you that minimize fraud. They don't eliminate it 100%, but they do minimize fraud. Those tools are usually referred to as positive pay or ACH blocks, and if you're interested in learning more about those, don't hesitate to ask. But these are all services that banks can give you that, again, limit the opportunity for a fraudster to get a hold of your cash flow. Should you have any inquiries about other aspects of what I talked about today, or should you know of a business that perhaps is looking for a banking relationship or is looking to have some avenues of determining, is this the appropriate insurance for me or not? I don't know. This is going to, my end sucks. Forget it. Stop. I was trying to
You're fine.
go into.
No, go.
I was trying
Just
to go into that last bit to say, you know, if there's a business in the room, and but see, it doesn't really tie into your
Doesn't have to.
suggestion of make sure they know that you'll refer. You know.
I'm going to handle that.
Oh, you are.
I can whatever doesn't happen.
It's like
There
lost
have to-
and try to
you-
offer to again minimize the risk of fraudulent activities in your account.
Stop.
Yeah,
Stop.
that's it. I think that's where I'm going to stop.
Thank you very much.
Thanks.
Now,
Thanks, Miriam, for that. One of the things that, even though you've given us so much good information, that people remember is that a professional banker is one who knows where their special talents lie. They know where their banking facility lies. They know how to refer and where to refer to. And that's the key to a banker's banker. I know that you don't have an ego that needs to be fed by doing a deal that doesn't make sense for the client.
No, and often and I don't know that I would use ego.
It is an
Don't-
ego.
Well, you can say that I don't have an ego, which I don't, but I don't know that that's.
Most bankers are
All right.
egomaniacs.
What I was going to tack on to that
I know
is that-
them all.
Okay. You're right, George, because what we do at Wintrust, since we do have so many branches, 100+ branches, mostly in Illinois, is that if there is a specialty within our world where that opportunity is going to be better served, or if there is a bank or banker that is closer to that business and has perhaps a portfolio that is complementary to that business that is looking to meet a new banker, I often will refer those folks within our network or to professionals such as you and Keith when I find companies that don't have the pieces that you need to make sure that you're protecting your assets and your business the way it ought to be.
Thanks. The reason that that's so important for all of us is to remember that not any one professional can serve all of anyone's needs. And it's important to know that people can get out of their own way and do the right thing. Our other panelist coming up here is Keith Collins. Keith is and has been a general practice attorney who is very good at the nitty-gritty. He is extremely good at finding solutions to difficult problems, and he knows where to go to get things done. He has a concentration in real estate, but has had experience in contract, family-run businesses, wealth management, and he even knows how to write an honest-to-God, easy-to-understand will and trust agreement. Without further ado, Keith Collins.